There you go.
Hello traders, Cousin Benny coming to you from theclosingprint.com on January 27th, 2019. In this edition of your weekend video newsletter, we'll discuss the indices, all of which were marginally higher. The Nikkei and the Hang Seng were strong. Bond stock ratio is short-term neutral, long-term bullish. And we have high-yield corporate and junk bonds flagging, but still bullish and above support. The Dow Composite is continuing on its bullish trend, and the S&P 1500 is giving us a weak buy signal. The SPY weekly shows one of the reasons why I'm a bit more bullish, thinking that we could see a bit more upside. RSI is still rising, but mostly the bearish momentum tapered off. We did have some decent volume last week. We're looking for this to follow through. And the daily is showing some flagging action after pulling back shy of the 236 Fibonacci level from this pivot low up to that recent pivot high at 266.98. We're contained within this range. That's a good sign. And tick cumulative continues to rise on the daily time frame. Rinko continues building white bricks, so eliminating the noise, we can see that the cycle is up and that the longer term trend is still higher, as we saw on the daily and weekly charts. This is the 60-minute. The thing I want you to pay attention to is where RSI is presently. If RSI were to start drifting lower in a rapid fashion, that would tell me to look for a break of the 20-period moving average, the center of the Bollinger Bands, the green dashed line. The fact that RSI is above 50 suggests that the trend could remain intact, so we'll look for upside unless this turns back down dramatically. In addition, tick cumulative finished the day higher. Looking at the S&P 500 for a minute and thinking about breadth, with price action just below the 200-period moving average, the red line in the upper panel, we are watching breadth and how this plays out. The S&P 500, the S&P mid cap, and the S&P small caps, in addition to NASDAQ, are consolidating. Breadth is looking pretty good, which is leading me to believe we could be seeing rotation out of some of the high flyers that we saw in pharmaceuticals, for example. As fund managers really underperformed the markets last year with that 2018 sideways range that we were in, they could be looking to rotate into stocks that we saw last week, like semiconductors and airlines and transport. So watch for that kind of action this week. In addition, the NAMO McClellan oscillator for the NASDAQ is at extremes, but the cycle is bullish. In addition to what we see on the NIMO, 2,000 stocks on the NYSE composite continue to show strength and at extremes at the present time. We also want to keep an eye on VIX, which is dropping, showing a lack of fear in the markets. 16 was level where we saw it bounce before. We're just off of that level now, as the S&P 500 continues to drift up towards the 200-period moving average overhead. So if VIX starts to drop off dramatically this week, we'd be more bullish. And if it starts to bounce, we would be more bearish. All things considered, I was a bit surprised to see the put-call ratio drop as hard as it did, showing there are more calls being bought than puts, which generally is accepted as being more bearish short-term. Whenever we've seen CPC get down into the red zone and spike lower, it usually led to a short-term top, as you can see with the red arrows in each case. So that's a caveat for the bulls going into the week, and just something to keep in mind, together with the VIX. Also consider the New York Stock Exchange advanced decline, which continues to make new highs, about to take out this level that we saw back in early November. And finally, looking at the New York Stock Exchange new highs minus new lows. We can see that more new highs are beginning to permeate the markets. As we spiked on Friday, the biggest spike we've seen since over here in August. The most important thing being, of course, how negative we've been for the past 3 months. The change in direction over the last 4 to 5 weeks has been pretty pronounced, and the spike on Friday was very noticeable to start the week. Watching the sectors read from left to right each week. On Friday, these are updated. We can see how chartreuse green really jumps out at you the previous week on the 118 close versus 125 last week. More limes and greens coming in now. Still a strong market, but obviously overbought and taking a breather. In addition, we have some strength continuing to show how fund managers are starting to position more in international markets, having been underweight going into the end of 2018. These stocks from the MarketSmith Growth 250 all have one thing in common: relative strength line climbing. Alarm.com, Boeing, Cadence Design, looking for a breakout above these pivots. The buy point just overhead if it breaks out. Sienna, follow through. This was on the watch list back here in September, October. Continues to show relative strength and rising. Note annual sales over here in the left column on all of these as they break higher. Care Trust REIT, this was on the watch list back here when it built this cup and handle pattern. Domino's Pizza, relative strength line climbing, pivots overhead. Euronet Worldwide continues to follow through. Edwards Life Sciences coming up against a breakout level overhead. Do note that annual sales and earnings in each of these continues to climb. That's the thing that we want to see, along with a strong composite rating and a A or better, an A or a B in the timeliness rating category. FISV and Five Below, both of these looking good. FISV breaking out extreme strength in this name. Provides integrated information and electronic commerce systems services to about 12,000 clients worldwide. Keep an eye on this one. Watch annual sales and earnings. 93 composite rating, A for timeliness. Looking for a flag now above this level in the short term. Hill-Rom reported earnings last week. Following through, breaking out, looking for a flag now if it pulls back in a little bit. IAC operates search engines, online portals, advertising, etc. This one looks really good. Nice cup and handle, potentially overhead at this breakout zone. In the next few weeks, we have earnings scheduled for the first or second week of February. KL, we talked about this one, relative strength on the dollar moving lower. Lululemon, flag, cup, looking like a follow through. PayPal we talked about. Splunk, this one we talked about last week, looking for a follow through up to this level overhead. Viva Systems, previous watch list, looking for a breakout. Okay traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter. A watch list will be out later tonight around 11:30 on the East Coast, and about 8:30 for you guys and ladies out on the West Coast. Get outside, enjoy the weekend, enjoy your family, and have a great day. We'll talk to you soon. Hope this helps. Take care.